Imagine a world where the very institution tasked with minting your nation's currency suddenly slams its doors shut on one of the most trusted forms of wealth preservation, leaving millions scrambling in panic as prices explode beyond control. On this crisp morning of January 14th, 2026, the United States Mint, the bedrock of American coinage, issued a chilling notice. All sales of silver numismatic products are indefinitely suspended, not because of some minor glitch or routine maintenance, but due to silver prices rocketing so violently that even the government can't keep up. Picture this. Spot prices surging past $89 per ounce in a single trading session. Dealers hiking premiums to astronomical levels, and whispers of a full-blown physical shortage rippling through global markets. This isn't just a market hiccup. It's the first crack in a facade that's held for decades, signaling a potential collapse where paper money loses its grip and real assets become the only lifeline. But the real terror lies not in the halt itself, but in what it unveils, a hidden war over the world's dwindling silver supply, where sovereign nations, industrial giants, and everyday investors are locked in a desperate race that could redefine wealth forever. Stay with me, because what unfolds next isn't just analysis, it's the untold story of how the suspension could trigger an economic domino effect. And by the end, you'll see why ignoring it might cost you everything. As the sun rose over Washington, D.C. today, the U.S. Mint's website flickered with an update that sent shockwaves through the financial world. For those unfamiliar, the Mint isn't some obscure factory. It's the official producer of America's legal tender coins, including the iconic American Silver Eagle, a 1-ounce bullion piece that's been a staple for investors since 1986. These aren't just collectibles, they're tangible hedges against inflation, backed by the full faith of the U.S. government. Yet, in a move that echoes the chaos of past crises, the Mint announced a complete pause on sales, citing rapidly rising silver prices as the culprit. They claim it's for pricing adjustments. But peel back the layers, and you'll find a deeper turmoil. Just hours before this bombshell, silver futures on the COMEX exchange had leaped another 5%, pushing the spot price to $89.67, a level not seen since the speculative frenzy of the early 1980s. Traders in New York were glued to their screens, watching candles spike vertically as buy orders flooded in. But why now? What invisible force is propelling this metal, once dismissed as gold's poorer cousin, into the stratosphere? The answer begins not in the trading pits, but in the quiet hum of factories halfway around the world, where silver's industrial demand is devouring supplies at an unprecedented rate. Silver isn't just money, it's the backbone of the green revolution sweeping the globe. Think about the solar panels blanketing rooftops from California to Kent, each one relying on silver paste to conduct electricity efficiently, or the electric vehicles zipping through London streets, their batteries and wiring laced with this conductive wonder. In the past 24 hours alone, reports from industry analysts have highlighted a surge in demand from China's photovoltaic sector, where production quotas for solar cells are being ramped up to meet aggressive carbon neutrality goals. Beijing's factories are churning out panels at a clip that requires millions of ounces of silver annually. And with export restrictions tightening since the start of the year, that metal isn't flowing westward as freely as before. Add to this the booming electronics market, smartphones, laptops, even the AI chips powering your daily life. And you have a perfect storm of consumption. But here's where it gets intriguing. While demand skyrockets, global mine production has flatlined. Major producers like Mexico and Peru are grappling with labor strikes and environmental regulations, squeezing output to levels barely above last year's. Whispers from mining conferences in the last day suggest that new discoveries are scarce, with exploration budgets slashed amid economic uncertainty. So, as inventories dwindle, the physical market tightens, forcing prices upward in a vicious cycle that's now ensnared even the U.S. government. The Mint suspension didn't happen in a vacuum. It's the culmination of weeks of building pressure that erupted overnight. Rewind to yesterday evening, January 13th, when the CME Group released its daily depository statistics. A routine report that suddenly read like a thriller. Over 1.8 million ounces of silver vanished from commercial vaults in a 24-hour blitz, with JP Morgan's fortress-like storage in New York bearing the brunt, a staggering 1.3 million ounces withdrawn in one fell swoop. This isn't pocket change. It's enough metal to fill armored trucks stretching end to end. Who orchestrated this raid? Speculation is rife among traders on platforms like X, where posts from financial insiders point to Asian conglomerates or central banks quietly stockpiling. One viral thread from a commodities expert claimed it's a sovereign wealth fund hedging against dollar weakness, pulling metal out before the arbitrage window slams shut. And arbitrage is key here. While New York's COMEX quotes $89, Shanghai's physical market is reportedly fetching between $98 and $100 per ounce, creating a lucrative gap that's sucking silver eastward like a financial black hole. The Mint, reliant on suppliers who operate in this global arena, found itself outbid. Their vendors, facing offers from Chinese buyers willing to pay premiums, simply couldn't deliver blanks at the old rates. So the government hit pause. But in doing so, they've amplified the panic. turning a supply squeeze into a full-throated crisis. Now, let's zoom in on the human element, because behind these numbers are real people feeling the sting. In the bustling coin shops of Chicago and Manchester, dealers are fielding frantic calls from customers desperate for silver eagles. Premiums, the markup over spot price, have ballooned overnight, from a typical $3-5 to upwards of $15 or more. According to live updates on sites like AppMex and JM Bullion, one dealer in Texas shared a story on a trading forum just hours ago. A retiree walked in with his life savings in cash, only to be told they were out of stock, premiums too high to justify. "It's like 2020 all over again," he lamented, referencing the pandemic-induced bullion rush that emptied shelves. But this time, it's different, more insidious. The mint's halt removes a primary source of fresh supply, forcing the market to rely on secondary channels where hoarding is rampant. Social media is ablaze with reactions. On X, hashtags like Silver Squeeze 2026 are trending, with users sharing screenshots of empty online carts and skyrocketing eBay listings. A post from a UK investor went viral, decrying how Brexit-era import duties compound the issue, making American coins even scarcer across the pond. This grassroots frenzy isn't just noise, it's fuel for the fire, driving more buyers into the fray and pushing prices higher still. As we delve deeper, consider the broader economic ripples that this suspension is unleashing. The US dollar, long the world's reserve currency, is under siege from multiple fronts. Inflation data released this morning showed core CPI ticking up to 4.2%, higher than expected, eroding purchasing power and sending investors fleeing to hard assets. Gold, silver's shinier sibling, breached $4,600 an ounce in tandem. But silver's outperformance, up over 50% in the last month, signals something unique. An industrial crunch layered atop monetary fears. Central banks are hoarding too. The World Gold Council noted increased silver allocations and reserves, though silver's data is murkier. But here's a chilling thought. If the mint can't price its own products, what does that say about the Treasury's grasp on fiscal reality? Bond yields spiked 20 basis points today on news of the halt, with analysts warning of a potential feedback loop where higher commodity prices stoke inflation, forcing rate hikes that could tip the economy into recession. In the UK, similar anxieties are mounting. The Bank of England is monitoring sterling's slide against the dollar, and silver importers are bracing for customs delays amid this volatility. The suspension isn't isolated, it's a symptom of a fracturing global supply chain, where geopolitical tensions, from US-China trade spats to Middle East unrest, threaten to choke off metal flows entirely. Yet, amid this chaos, opportunities flicker for those quick enough to seize them. Savvy investors are pivoting to alternatives, Canadian Maple Leafs, British Britannias, or even generic rounds from private mints. But even these are tightening. Reports from the Perth Mint in Australia indicate production strains, with wait times extending weeks. On trading floors, the bulls are emboldened, front-running what they see as inevitable, a push through $90, then $100. Technical charts show silver breaking key resistance levels, with momentum indicators flashing, overbought but unstoppable. One hedge fund manager, quoted in a Bloomberg terminal update this afternoon, predicted a violent repricing, as physical demand overwhelms paper shorts. Short sellers, those betting on a price drop, are nursing billions in losses, their positions squeezed as deliveries are demanded. This dynamic echoes the GameStop saga of 2021, but with real-world stakes, control over a critical resource. As the day unfolds, exchanges are abuzz with rumors of margin hikes to cool the fervor. But past attempts, like yesterday's failed increase, only accelerated the climb. The question hanging in the air, how high must prices go before equilibrium returns? Or does this mark the dawn of a new era where silver commands triple digits as the norm? Shifting gears to the international stage, the US Mint's move has ignited a diplomatic undercurrent that's impossible to ignore. In Beijing, state media outlets are subtly celebrating the premium on Shanghai exchanges, framing it as evidence of China's industrial prowess outpacing the West. Just last night, a policy brief from the People's Bank of China hinted at further stockpiling to secure tech dominance, a move that could exacerbate the global shortfall. European markets aren't immune. In Frankfurt, silver ETFs saw record inflows today, with German investors citing euro weakness as a motivator. But beneath the bravado lies vulnerability. Solar giants like Longi and Jinko Solar are voicing concerns over input costs, with shares dipping 3% on fears of margin compression. Elon Musk, ever the provocateur, tweeted early this morning about Tesla's silver needs for battery tech, warning that shortages could delay EV rollouts, a statement that alone juiced prices another $1. This interconnected web means the mint's suspension isn't just American news. It's a global alarm bell, prompting nations to reassess their strategic reserves. India, a major silver importer, saw rupee-denominated prices hit all-time highs, sparking protests among jewelers in Mumbai who rely on the metal for traditional crafts. Diving into the mechanics of the halt itself reveals a bureaucratic nightmare that's almost comical, if not so dire. The Mint's notice, buried in a customer service email blast, reads like corporate speak. We are temporarily suspending sales to reassess pricing in light of market conditions. But insiders, speaking anonymously on financial podcasts today, paint a grimmer picture. Procurement teams are scrambling, unable to secure feedstock at viable rates. Without dipping into treasury funds already strained by ballooning deficits. This echoes historical precedents, like the 1960s when the U.S. halted silver coin production amid a similar drain, leading to the debasement of currency. Back then, it marked the beginning of the end for silver-backed money. Now, it could signal the erosion of fiat confidence. Retail investors, many of whom turned to silver post-2008 crash, feel betrayed. Forums like Reddit's r Wall Street Silver are exploding with theories. Is this engineered scarcity to prop up miners, or a covert admission of hyperinflation? One top post, garnering thousands of upvotes in hours, shared a leaked email from a mint supplier confirming no deliveries until volatility subsides. The uncertainty breeds fear, and fear drives buying, a self-fulfilling prophecy. That's propelling us toward uncharted territory. As we approach the heart of this unfolding drama, a stark contradiction emerges that shatters the narrative we've built so far. What if the mint's suspension isn't merely a reaction to high prices, but a deliberate strategy to mask a far more alarming reality? The U.S. government's own silver stockpiles are critically low. Fresh data from the U.S. Geological Survey, updated just this morning, shows national reserves at their lowest in decades, depleted by years of lending to industry without replenishment. This twist reframes everything. The halt isn't about pricing, it's about conservation. Preserving what's left for essential uses, like defense electronics or medical devices. Suddenly, the whale withdrawals from JP Morgan make sense not as opportunistic raids, but as preemptive strikes by entities sensing the vulnerability. This uncomfortable truth forces us to rethink the entire market. If the sovereign can't supply its own coins, how secure is the global financial system? The urgency escalates, with vaults bleeding and demand unyielding. We're not just facing higher prices. We're staring down a potential default where contracts go unfulfilled, echoing the oil shocks of the 1970s, but with a monetary twist. The stakes couldn't be higher. Economies grind to a halt without silver's conductivity. Green transitions falter, and wealth inequality widens as only the elite secure physical holdings. Building on this revelation, the tension mounts as we examine the fallout in real time. Dealer networks, from Scottsdale Mint to the Royal Mint in Wales, are rationing inventory, implementing purchase limits that echo wartime controls. A live stream from a Las Vegas coin show today captured the frenzy. Lines snaking around blocks, bidders paying 20% over spot for whatever's available. Economists are sounding alarms. One prominent voice on CNBC warned of contagion to other commodities, citing copper and platinum following silver's lead. But the human cost looms largest. Pensioners in Florida cashing out IRAs to buy bars. Young families in Birmingham foregoing vacations to stack coins. Social reactions on X paint a vivid picture. A thread from a solar engineer detailed how project delays due to silver scarcity could cost jobs, while a UK trader shared charts predicting $120 by month's end. The narrative shifts from a speculation to survival. As prices climb, affordability slips away, locking out the average person and concentrating power in fewer hands. This isn't abstract finance, it's the reshaping of society, where access to real money becomes a privilege. The climax arrives with brutal clarity. The U.S. Mint's suspension is the canary in the coal mine, heralding the end of cheap silver and the dawn of a resource-scarce world. As spot prices tick toward $90 in after-hours trading, the full consequence crystallizes. A bifurcation where paper markets detach from physical reality, leading to defaults, lawsuits, and perhaps even regulatory overhauls. The core truth? Silver's undervaluation for decades, suppressed by derivatives and shorts, is unraveling violently. Exposing the fragility of our debt-based system, we've seen the signs: vault drains, arbitrage gaps, industrial hoarding, all converging to force a repricing that could top $200 per ounce, if unchecked. The emotional weight hits hard. This isn't just about profit, but protection against a devaluing dollar, a hedge for uncertain times. The government blinked first, but the market won't wait, barreling toward a resolution that's as inevitable as it is transformative. In the quiet aftermath, as the dust settles on this seismic day, one thing becomes profoundly clear. The U.S. Mint's halt isn't an endpoint, but a wake-up call to reclaim sovereignty over your wealth. We've journeyed through the chaos, from soaring prices to hidden depletions, emerging with a sobering enlightenment. In a world of infinite fiat, finite assets like silver hold the true power. You're left reflecting on your own position. Do you wait for the mint to reopen, premiums intact, or act now amid the storm? The story, raw and urgent, underscores a timeless truth. Those who heed the warnings thrive, while the complacent falter. And in channels like this, where buried realities surface, you'll find the edge to navigate what's next. Subscribe for more.